All right, teammates. I am excited to be able to come to you this evening and talk about a really key element of the business, and that's understanding life insurance. Life insurance is the foundation of what we do here in Primerica. You know, when you talk about services, the two bookend services of Primerica, even though we offer more services, but the two bookend services that we offer in Primerica is life insurance and investments. Life insurance and investments. Life insurance is the foundation, right? Life insurance is the foundation, but the investment part really just kind of shapes the rest of the house, of the financial house. But it's impossible for you to have a strong financial house if the life insurance component is weak. And so in this business, when you join the business, the first license that you get is a life insurance license. So by that being the first license that you get is life insurance, that's the first license you can actually make money with, is the life insurance license. But I know most of us, we come into this business as a part-timer. We have no background whatsoever in life insurance. So even when you go to a class, you study for a state exam, you pass your state exam, you're still probably unclear on what does this actually look like when you're sitting in front of a client. Like, what is, like, how is this supposed to actually work, right? And so you know the facts and the details and some of the nuances about life insurance. But what about the life insurance product that you offer, right? Because we don't offer all kinds of life insurances here at Primerica. We have a particular philosophy of buy term life insurance and invest the difference. So we're a buy term, invest the difference philosophy company. We don't believe in trash value insurances where you have life insurance and a savings bundled together with the insurance, right? We don't believe in that crap. And we'll talk about that in the coming weeks, definitely starting next week, and how our philosophy of buy term and invest the difference is superior to the whole cash value, whole life, universal life, variable life, index life, stole your life, whatever you want to call it, types of policies where they're doing insurance and a savings bundle together. We will talk about how we're different starting next week. But this week, we want to hone in on, man, what are the particulars of the product that we're able to offer? Like, what makes our life insurance program special? Right? And so I think that these are some things that you definitely need to know. You need to know, all right? And so let me share my screen again. And so the name of this is Understanding Life Insurance. This is really the series that I'm going to be doing for the next few weeks, right? And so Understanding Life Insurance, this fits into what we talk to people about when we do our winning presentation. We talk about, hey, man, we have a 3-strategy approach to help people build generational wealth. We got investments, we got life insurance, and we got entrepreneurship. We have investments, we have life insurance, and we have entrepreneurship, right? That's our 3-strategy approach to helping people create generational wealth. But what we're going to dig into tonight, starting tonight, is the life insurance piece. Just a couple of things that I want to talk to you guys about, and talk about understanding life insurance. Now, I know that I can pull several articles about, you know, life insurance and the need that's out there. This is one article that I found that was really interesting. It says Black Americans are more likely to buy life insurance than the general population. It says Black Americans are more likely to buy life insurance than the general population, right? And if you read an article like this back in 2017, it just lets you know, man, that look, man, we're our community is open to life insurance. They're open, right? The problem is there's not a lot of people that are out there selling the life insurance. Who do they go to talk to about it, right? And so that's the challenge. And so, but you are a person to where you have the license. You have the license. So now we need you to be on the front line, whether it's in the African-American community, the Hispanic Latino community, whatever community that you find yourself in, you need to be a change agent in that community. Because I'm telling you right now, family, most people, when it comes to life insurance, this is facts. The main life insurance that most people have that you're going to come in contact with is that they got the coverage on their job. they got insurance on the job. That's it. They really don't have anything outside of their job. And they're under this delusion that I'm good. Me and Jackie Mayfield, we were having this conversation earlier about how people really think that they have coverage through their job and they're good, like they're taken care of. And Jackie's like, man, I tell people, look, have you not been paying attention to what's going on in America right now? In terms of, man, people are getting laid off and furloughed left and right. I mean, there's 30 plus million Americans that are still unemployed as a result of this pandemic. You know what I'm saying? And so you got all of these things that are going on and people still sitting around saying, hey, I got coverage through my job. What? But let's talk about the coverage. I mean, even if they have coverage on their job, who owns it? Who controls it? Not you. It's the job that owns it and controls it. It's the job. And so why put yourself in a vulnerable position, a very insecure position of relying on coverage on your job, and them folks at the job don't even like you. They don't even like you. And I'm telling you right now, we have to have a crusade in our heart that conveys that message. Now, obviously, you're going to clean it up when you talk to clients, but we need to let people know that no, that's not what you need to be relying on is insurance for the job. You need to have coverage outside of your job. Now, when it comes to owning coverage outside of the job, you need to make sure that you own the right kind, right? And we're going to talk about that. And so getting back into the presentation, not all term insurance is created equal, right? So there's people out there that say, hey, I have term insurance, I have this, I have that. Well, there's levels to term insurance, right? There's levels to this thing, right? Primerica's term insurance is very souped up, right? We have a lot of bells and whistles that are attached to our term life insurance. There's competition out there that they also sell term life insurance, but what do you get? What do you get? What bells and whistles, what benefits does that term insurance have? And so what we need to start getting into when we're having these conversations about life insurance, listen to me, teammates, what we need to start getting into when we have conversations with people about life insurance, it doesn't need to be just about price. I know I'm guilty of it as well, is that, man, we're looking to try to get them something that they can digest in terms of the monthly expense. And that is so important. That is so important. But what happens in that situation where you're in a competitive situation with another company and they come in maybe about $5, $6 less than what your quote is? Or how about $10 less than what your quote brings? What do you do there? See, if you're a person that all you know is how to compete based on price, you're in trouble because now you got to try to justify why should that client invest $10 more a month by going with you versus going with the other company. And that's where you have to create the value gap between what are you bringing to the table versus what the other company is bringing to the table that will justify that $10 delta. Are y'all with me? And so that's called creating that value gap or bridging that value gap, right? And so we bring a lot to the table that other insurance companies do not bring. And so we have to start knowing how to really market our product based on the value that we bring and also the purpose that's behind it, the purpose that's behind it. And so let's get into some of the bells and whistles. But before we do that, I want to tell you guys just some facts about your company, right? Did you know that in 2019, Primerica issued over $94 billion in face amount coverage? In 2019, the company last year issued over $94 billion in face amount coverage, but that's not all. As of 2019, Primerica had over $808 billion in face amount coverage in force. Guys, that's almost $1 trillion that Primerica has in coverage that's on the books. I want you to think about that. $808 billion in face amount coverage in force. And also in 2019, Primerica paid out over $1.4 billion in death claims. Come on, somebody. Man, this company pays out over $1 billion a year in death claims. The company that we're a part of, that you're licensed with or you're working on getting licensed with, puts into the community. I'm talking about middle income, middle class, working class people. People who may not have a lot of money, but one day they want to. Pumping $1.4 billion into the community every year. Over $1 billion. And for us, the market that we deal in, we have an opportunity to be able to put more life insurance in force that if God forbid tragedy strikes a family, we put more money into the community. You got to see it as just like our national sales director, Tony Stevens, talked about on Sunday, is that you have a license to write legacy. You have a license to write legacy when you have a life insurance license, right? And then on top of that, Primerica pays an average of $3.83 million in death claims every single day. Every single day. Today, Primerica paid out over $3.83 million in death claims. Tomorrow, it's going to be the same thing. The next day, Primerica pays almost $4 million a day in death claims. And in my Primerica career, I'm in a position to where I've had to pay some death claims, and everyone is unique. I've paid small death claims. I've paid larger death claims. And it's just the reaction that, we get when the death claim is paid. I remember one story. I want to tell you guys this, then I'll get into the particulars because this is important. Because if you stick around this business long enough and you stay connected to the crusade, a time may come to where you have a client that passes away and you have to deliver a death claim. You have to deliver a death claim. Now, the company gives you an option. Hey, when the claim is processed, do you want us to mail the check directly to the client or do you want to deliver it? I always say, hey, let me deliver it because I want to give that personal touch. Send it to me so I can deliver it to the family, and I can let them know that, hey, I'm here for you. I'm here for you. I just like that personal touch. And I'm recommending all of you guys do it that way. Never have it to where the check gets down. If your client lives in another state or something like that, that's different. Y'all get what I'm saying. But if your client is local and in the general area, driving distance, so to speak, always have the check sent to the office so you or we can personally deliver that death claim. We had a situation where my sister-in-law, who actually lives here with her family now, this is before she was married and all that stuff, and before she became a dentist, she was working at a dental office, and she had gotten licensed with us and all that good stuff. And this is before Raheem and I were married. But she was just kind of hanging out in Houston after she had gotten her undergrad degree, and she had a coworker of hers that said, hey, man, I'll get some life insurance from you. Now, she had talked to other people that worked up there at the dental office. No one was interested. They were like, oh, I ain't got time for that. But this one guy, right, he was a young guy, wasn't married, no kids. He said, hey, man, I'll sit down with you. And he sat down with her and he got a policy from her. And it was a nice size policy, man. I think it was like, $275,000, $80,000 policy. He wasn't paying much for it. I mean, he was in great health. He was young in his 20s and stuff like that. I mean, so he wasn't paying much for it. So he got a policy. Well, time passed. My sister-in-law moved back to the East Coast to start dental school and all of that. And so, or a baccalaureate program and all that good stuff. And before she went to dental school. And lo and behold, she was on Facebook, I believe. And she starts seeing these messages come across Facebook saying, oh, man, it's so tragic what happened to so-and-so. So she's like, what happened? And so she looks and she investigates. She's like, oh, my gosh, he passed away. Now, it ain't like years, man. Like he's still in his 20s, a young guy. She's like, what happened? So in her mind, she's like, dang, that's messed up. That is so tragic. That's sad. Wait a minute. He got a policy with me. Let me call and find out whether or not that policy is still in force. And so lo and behold, man, I mean, look into it and all of that stuff, man, boom, policy still in force. And not only is the policy still in force, Reg, but the increasing benefit rider then kicked in, right? So his coverage has gone up by 10% for the past 4 years, 5, y'all with me? And so we like, okay, who's his beneficiary? He put his brother down as his beneficiary, but we don't have his brother's number. This is one of the reasons why doing the beneficiary emergency contact certificate is so important, because we had to try to track down his brother. And so finally, we track him down. And I never forget this. I was at a gas station off of 290. My sister-in-law calls me and I'm pumping gas, and I get in the car and she says, hey, Nick, I got him on the other line, 3-way. All right, bet. So I'm sitting in the car and I said, connect them in. So we connect in. I introduce myself and this, that, and the other. And I'm like, what happened? And he's telling me that this young man, he had a real bad headache. And so he told his mom, he was like, man, I just cannot shake this headache. And she was like, well, just go ahead and take a nap, because he still lived with his parents. Go ahead and take a nap, and maybe that'll help. He went to his room, took a nap. He never woke up. He died in his sleep. Later on, they found out that he had a heart defect ever since he was a baby. Must have had it since he was a baby. It went undiagnosed all those years. So it was a result of a heart issue that he had. They never knew he had it. So he never woke up. And so I started asking, I was like, man, how did you guys pay for the funeral? How y'all paying for the funeral? He said, his brother says, my parents took a loan out of their 401k to pay for his funeral. And I said, man, I wish we had gotten to you guys sooner, because your brother had a life insurance policy with us. And he named you as the beneficiary on that policy. And his brother says, well, how much is the policy? And I said, man, your brother left you over $320,000. Instantly, his brother starts crying. I mean, he breaks down on the phone and starts crying. And all he's saying is, I can't believe it. Thank you. And long story short, his brother lived in Dallas. And we had just had Nasiah, our oldest son, and the claims check came in. I drove up to Dallas to meet him at his job. He worked at the 7-Eleven corporate office in downtown Dallas. I got up one morning, real early. I drove up to Dallas. He reserved a conference room for us, and we were in that conference room, and I hand delivered him that death claim check. And I just can't begin to tell you the emotion that he had in that moment, because he was like, now we can put a headstone on my brother's grave, and I can pay my parents back, all of that. So being able to deliver a death claim like that, I'm telling you right now, family, there's nothing that can compare to that moment. I didn't know him, he didn't know me from Adam's house cat, but being able to stand in the gap at a time of grief with a legacy, that's the position in the business that we're in. And I don't want you to take it light. I don't want you to take it for granted. I want you to really know that, man, you have the power to impact and change lives. I got other stories too. I'm gonna spare y'all others. I'll maybe tell them and he's not going how I've delivered death. It's just, I mean, shout out to Reggie Fuller. He about to deliver a death claim check here in a minute, right? He called me about a week ago. He got one to deliver. I'm telling you right now, y'all, if you stick around long enough and you help people, man, you just never know when that time may come. And so you just want to make sure that, you know, if somebody closest to you passes away, that if they don't have life insurance, you at least talk to them about it. Don't let anybody that you know pass away and not have life insurance and you didn't talk to them about it, because it'll leave a very, very sour taste in your mouth. I promise you that. And so 94% of Primerica's death claims are paid within 14 days. Y'all ain't hearing me. 94% of Primerica's death claims are paid within the first 2 weeks. I didn't say 14 weeks. I didn't say 14 months. 14 days, 94% are paid within the first 14 days. Come on, somebody. All right. And so, and also Primerica is, y'all already know this, rated A+, superior by AM Best. Only 17% of life insurance companies meet this standard. And there's a lot of operations and outfits that are out there, companies. Primerica is A+ rated, all that good stuff. So don't let anybody try to tell you anything different, right, about Primerica. And I mean, they don't know what the hell they talking about. Excuse my language. It's just the facts, right? So what we do is right 100% of the time. All right, so for this training tonight, I want you to get access to this Primerica rate book. Yep, you can have access to it. It's on the Primerica online website. For this next part, just like it says here, you'll need to reference the Primerica rate book, right? And so this is what it looks like. It says Term Now, Custom Advantage. Well, Nick, where do I get to it? I'm glad you asked, right? So if you go to, if you log on to Primerica Online, right, this is what your page probably looks like, or some version of it, or whatever the case may be. There is a tab up here at the top that says Products, right? You click that tab, there's going to be a drop-down menu come, and then there's a life insurance link. You click the life insurance link. Hopefully everybody's with me, right? Click the life insurance link. Then once you've clicked on the Products tab, life insurance link, then what do? Okay, what you do, this screen is going to come up. If you look on the right-hand side of the screen, under Quick Links, there is a link that says Product Rate Book. You click that, Product Rate Book, right? And so do that. On the right-hand side of the screen, under Quick Links, you're going to click the link that says Product Rate Book. Once you click Product Rate Book, then a screen like this is going to pop up, right? And it says the rate books. You're going to click on this second one from the top that says PLA-165, right? And the publication number and all that stuff, it says Term Now Series and Custom Advantage Series. That is the rate book. That is the rate book that you want to access. So you click on where it says that PLA-165 and you're in there. You're in there, okay? You're in there. So excited about that. I'll give you guys some time to maybe pull up your rate book and all that good stuff, because you'll need that. We'll be referencing pieces of that throughout. I got mine pulled up right here on my phone. You know what I'm saying? It's your rate book, so I'll be referencing that as well. This stuff. Constance, you having trouble getting on to the website? Okay, if you are, you might need to clear your browser history or whatever the case may be, or clear out the cookies or whatever that are in your web browser. Dang, y'all can't get on either. The website is down. Y'all having challenges getting on? Coach Walker, talk to us, man. What's going on?
Yeah, I'm not able to log in either. I've tried my phone and my computer.
Hold on, I can't hear you. For some reason, your volume is.
Can you hear me?
Can
you hear me?
Yeah, I can hear you. I can hear you fine.
Nick, can you hear me?
I can hear you fine.
Why can I not hear her?
We can hear you.
Can you hear the rest of it?
Yeah, so it's saying,
Oh,
There's
my
a
volume.
site-
Oh, Lord
site
Jesus.
minder agent encountered an error while handling requests. Please ask the administrator to look for a message in the service agent log to check for the cause. So I tried my phone and my computer. It's not allowing us to log in.
Oh, that sucks. Does everybody else, can anybody else get in?
Can anyone get in? They said no.
Oh, man. Them daggum hackers, man. Oh, all right, so hopefully at some point we'll be able to jump on in the evening. But I got y'all, man. I got mine up. You know what I'm saying? I got mine. All right, so I'll be able to supplement the dealio. Okay, appreciate you, Coach Walker, for letting us know that. But yeah, so this is the rate book. You should be able to download it. Let me say this, teammates. It just might be wise for you to. It just may be wise for you to download the rate book anyway, just to have it at your disposal, have it on your computer, have it on your phone, put it in your Google Drive, whatever the case may be, because it's just a reference. It's just a good reference to have. You know, a lot of the questions that may come up, by a client, it's just something that you can always refer back to. All right. And so, so what we're going to talk about tonight are, hey, what are the top 20 features? What are the top 20 features of the Primerica term product, right? So there's 20 things that kind of stand out that make us the creme de la creme in the industry. So what are the top features of our product? And so let's talk about feature number one. We take an educational approach and a personal solution approach. We offer clients a free wealth builder. This right here is a separator. It's a real separator in the business. We take an educational approach. We allow people to get a full financial plan. We do a wealth builder. That's you bridging that value gap that I was talking about, or creating that value, however you want to slant it, or whatever your perspective is on it. This is a separator, what separates us from other companies out there. How many times have you guys sat down with somebody that got some insurance, like they got insurance outside their job already, and they have just some random number, like just some random amount of life insurance? Like, who's that happened to? Like, that's happened to me. I mean, that happens a lot. But people just got a random amount of life. Like, I got $62,000 in life insurance, Nick. You'd be like, how did the agent come up with $62,000 to put on you? Or $63,740 a month. I mean, $740 in life insurance. Like, they even be having the nerve to have it all the way down to the dollar amount like that. So what happens is, in most situations when people have coverage outside of their job, when the agent sits down with them, they already know that I'm going to sell Benicia this whole life policy, or this universal life policy. All I need to know is how much can she spend. So they're leading with, well, what's your budget? And if Benicia say, well, I can do $75 a month, they're going to be like, all right, well, how much whole life coverage can Snake Farm give you for $75 a month? Oh, it come up to $61,342 in coverage. Yeah, that's what $75 a month is going to give you. And that's how much life insurance coverage that they'll sell her. They never take her through any type of assessment to figure out how much she needs, right, based on the things she was once covered. Because I know that, because when we sit down with people and we do our love test, which is the dime, people literally be like, man, ain't nobody ever asked me this before. I don't know. Man, I ain't never thought about that. Wow. Do I want my more, man, kids' education? Yeah, I guess. Yeah, I want that covered. Wow, man, if I pass away, how much would I want to leave my family in a lump sum? And with all the, I never thought about that before. These are people that already got policies. No one's ever talked to them about that. So you bring the value to the table, even if they don't get what they need, at least you're educating them on what their need is. And never stop doing that, family. Never stop doing that, because that is a value-based approach. Then when you do the wealth builder, you're not just talking about life insurance. You're talking about them saving money, investing money, putting them in a position where hopefully one day they could be self-insured. It's a different conversation. You're taking a holistic approach. So if you're ever in a competitive situation, you can ask this one question. What are you offering the client? Well, I'm offering them some life insurance. I'm not just offering them life insurance. I'm offering them a wealth builder plan where life insurance is the foundation of it, but we're having a conversation beyond that. More value. It separates you. I've been in competitive situations where it's come down to that question. What are you off? It don't matter what you think that term is and all that, because we can go back and forth. Me and the enemy agent, we can go back and forth, right? At the end of the day, what are you offering the client? If all that you're offering is just life insurance, you're missing it. Because somebody can come along and sell something that's cheaper than yours and they'll move. But if you're offering them more value, y'all gotta hear me, then you're in a different weight class than everybody else that's out there, all right? And so we take that educational approach. Number 2, personal service and convenience house call. That ain't, okay, a little different now. I didn't modify the presentation, but we used to meet with people in person. Just a little different now. We're doing everything via Zoom. Still house calls, but we're doing it virtually, right? Still giving grade A personal service. And so we still got that component. So a lot of times people might buy life insurance through the internet and all that type of stuff. Well, who your representative? Who is that? Who you dealing with? I don't know. It's a call center person that just signed me up. They don't have any kind of connection. Every time that they got a question about their policy, they got to call an 800 number and ask a different person the question, as opposed to dealing directly with you as somebody that can break that thing down. If I got a question about it, if I want to add my grandbaby, if I want to be able to up my coverage, lower my coverage, I can call Benicia and she can do that for me. That's the personal touch right there. All right, that's number 2. Number 3, client guaranteed insurability to age 95, right? Client is guaranteed insurance until age 95. Well, Nick, what do you mean? You know, I thought that if a person had a 30-year term policy, at the end of 30 years, their coverage go away. You guys will hear that often. Well, don't the coverage go away at the end of the term? With some companies, that may be the case. Not with Primerica. Not with Primerica. With Primerica, just because a person gets to the end of their term, that does not mean that the coverage goes away. It just means that the cost will change. So in Primerica, when you hear term, that means that the cost stays the same for the length of that term. If a person has a 10-year term, the cost is going to stay the same for 10 years. 25-year term, it's going to stay the same. Their premium is going to stay the same for 25 years. 35-year, premium stays the same for 35 years. But at the end of the term, the coverage does not go away. The client can renew the policy and keep that policy until age 95. If they pay the premiums, they will stay covered until age 95. So don't let anybody tell you that term is bad because at the end of the term, the coverage goes away. Not with Primerica. That's not how we work. Our coverage stays in force if the client pays the premium until age 95. Different term products. We got Term Now, which is a product that, you know, if you do that product, you can pretty much bypass doing a paramed exam so you don't have to do the height, weight, blood, and urine, all that good stuff. You got Custom Advantage, which does require a paramed exam, but you get a little discount with that. You got Term Pro, which is for high net worth clients, people with some money. The Term Pro product allows them to be able to factor in their total net worth in terms of the life insurance piece. And then we even have Term Over 70, which Primerica does not underwrite. It is a product that we do through a third-party company, but it allows people that are over the age of 70 to be able to get life insurance, because our cutoff in terms of age that we can do a policy for a person is age 70, all right? And so we got various products that might meet different needs for the people that we're servicing, right? Different products. Number 5. And so, okay, wait a minute. So you can look at, and I won't go into this because it's a lot of different things. You can look at pages 3 and 4 and 9 in the rate book. You can kind of make a note of this and all that good stuff. If you want to look at it later, look at pages 3 through 4 or 3 and 4 and page 9 in the rate book, and it'll give you some information on the different term products and how they work. It's just good information to know, guys, just to be aware and informed on how it works. So page 3 and 4 and 9, right, in the rate book. And then also the different rate classes that we do non-tobacco, tobacco preferred, and also preferred plus, right? You can look on page 10, it goes in the rate book and it goes into the particular rate classes and all that good stuff and what those are about that we offer with our Primerica term insurance, all right? Let's move on to number 6. Number 6 is, I just mentioned this, we offer guaranteed level term. And so with the guaranteed level term, a person doesn't have to worry about their premiums going up. Now, if they do the increasing benefit rider, which we automatically add that, the cost of the premium every year will go up, but guess what? Their coverage amount goes up as well. Now, if a client does not want the increasing benefit rider, they can request not to have it. That's fine. But if a person gets a 30-year level term, they don't have to worry about in that 30 years that after 5 years, their cost going to go up. And after another 5 years, their cost going to go up. Let me tell y'all something. If you have somebody tell you that they got a term policy, and let's say they got $250,000, and this person is 38 years old, they got $250,000 in life insurance, they just got the policy last year, and they're paying like $19 a month, something's off with that. Something's off with that. And so they may have the type of product to where it is an annual renewable term, to where they get a person in at a low teaser rate. Listen to me, because you'll come across this, to where in the first maybe year to maybe 3 years or 5 years of the policy, it's going to be about that $19 a month. But then after that 5 years, that premium is going to jump up. Then another 5 years, it's going to jump up. Then in another 5 years, it's going to jump up. So if you look at over a 30-year period, with the premiums increasing every 3 to 5 years, what they start off paying at $19 a month, at $19 a month, by the time they reach the end of the term, God knows what they're going to be paying. And so they might sound as though, oh, I'm getting my insurance dirt cheap now, but if you do a cost benefit analysis on what would a level 30-year term with us cost you, what's the total cost you pay, versus what would your total cost be if you keep that same annual renewable term that you have, I guarantee you that we will come out less expensive. And so that's just kind of a little tidbit to throw out there. All right. So guaranteed level term. We have different term lengths: 10-year, 15-year, 20-year, 25-year, 30-year. One of the only companies out there that offers a 35-year level term. And that's a big daggum deal, family. That's a huge deal. One of the only companies out there, that offers a 35-year level term. All right. And so with that, we also have, this is number 8, a freedom accumulation benefit account, or we call it a FAB. You can research this or look at this later. It's page 7 in the rate book, talks about the FAB account. The FAB account is a feature that the company added to our term policies that allow a client to actually save money, right? Save money. Now, this money isn't saved inside of the policy. It doesn't work like a cash value element of a policy, to where if you want to get access to the money, you have to borrow it, and it lowers the amount of your coverage. And then if the client passes away, Primerica only pays out the death benefit. They don't pay out the money that's in the FAB account. No, that's not how it works. The FAB account is a separate savings account that a client can set up. It is an interest-bearing account. A lot of times people ask, well, Nick, what's the interest rate? It works kind of like a money market account. So it's not like it's making a killing, but it's going to do better than probably what a savings or a checking account will do at a person's bank. But it's like a money market account, and a client can elect to contribute a certain amount of money per month into their FAB, right? And so when they get their life insurance premium drafted, let's say that their monthly life insurance premium is $70 a month. And let's just say that they said, hey, I want to put $30 into the FAB. Well, Primerica is going to draft $100 a month, but they're going to separate out $70 to pay for the life insurance. The 30 is going to go into their FAB account, which is basically a savings account. And it'll be there for them. And they can get to that money at any time. It's not a loan, all that good stuff. That's their money. But here's a cool feature, is that if they ever get in a situation to where their policy is in jeopardy of lapsing, they are able to use money that's in their FAB to pay their life insurance premium. And if they have money in their FAB at any point, they can roll the money over out of their FAB into a mutual fund. And so why am I telling you guys this? It's because some of you guys, or a lot of you guys, you don't have your securities license yet. So you can't do investments. But what you can do is you can set up a savings. So instead of buy term, invest the difference, this is a way for you to go ahead and get your feet wet, and you can be buy term and save the difference until you get your investment license. And then any clients that you have that have a FAB, you can go back to them and say, hey, let's go ahead and start your mutual fund. And let's roll whatever money is over from your FAB into a mutual fund account, all right? And that could be in an IRA. It could be wherever they want to put it, all right? Because it's their money. And there's no penalty for that or anything like that. And so the Freedom Accumulation Benefit Account is an extremely powerful tool. I recommend that we do those more and not just be writing life insurance out there. Figure out, when you ask that question, when you look at your bills and income realistically, if you're doing a wealth builder, you should be asking this question anyway. When you look at your bills and income, realistically, how much could you comfortably set aside on a monthly basis to not only have a life insurance program, to be able to, but also to be able to save more money to create wealth? And then you give them those options. Some clients on a limited budget, $100 a month, blah, blah, blah. Most of our clients between maybe $150 and $350 a month. Got a fortunate few that can do $500 or more. Or there might be another number you're thinking about. Whatever number that client gives you, I would say, hey, I'm going to put some towards the life insurance, but I'm going to throw some in the FAB too. Throw a little bit in the FAB too. And just explain to the client that, hey, we're going to set up a FAB for you so that way you can start saving money. And it all fits in the monthly commitment that you got from the client. Don't just take the whole commitment and throw it towards life insurance. Do not do that. And we'll talk about that later. We'll put some of that money towards the FAB. I think we should start doing more of those. Does that make sense, guys? Give me a thumbs up if that makes sense. All right, perfect. Excellent. All right, so let's get back to it. Again, if you want to read more about how the FAB works, what are some of the bells and whistles to it? In the rate book, page 7. It may be some other pages, but I know you can read about it on page 7, all right? Primary and spouse waiver of premium benefit. This is on page 6 of the rate book. So waiver of premium, let me see if there's another thing in there. Okay. Waiver of premium is basically a situation to where if a person becomes totally disabled, Primerica will pay their life insurance premium for them, right? Primerica will do that. And so we offer that benefit for husbands and wives. Now, it is a benefit that they have to pay for. So if you add waiver of premium, it will increase the cost of their life insurance per month. But family, I'm here to tell you, I think that we need to start really looking at ensuring that we're putting waiver of premium on some of these policies. Now, I understand that it can mean the difference between them having this amount of coverage and this amount of coverage. And that's where you can kind of make a judgment call. Because we don't necessarily want to sacrifice the level of coverage that a client has for being able to get it in the price range. Like because the older that a person is, the more expensive that the waiver of premium rider is. But for some of these younger clients that we're meeting with that are single parents that don't have a spouse if something happens to them that can provide an income, we need to start having conversations with our clients about this waiver of premium benefit. Because if you got a single mom, right, who has a career and her family, depends on her income and all that good stuff, if she becomes totally disabled and it's not looking good, the last thing that you want that that single mom or that single dad worried about is paying for their life insurance. Trust me. Trust me. And you know what? Where you can start is, man, you know, your new recruits, they get on board. Make sure you talk to them about that waiver premium benefit and make sure you put it on their policy. If you don't have it on your policy, right? It's one of those things where you can't come back and add it later. You have to add it to the coverage that you're applying for at the time of the application. If you want to add waiver of premium to your policy later or to any policy later, you have to do a new amount of coverage, like you're doing a policy change to add more coverage. And if you add more coverage, then the company will allow you to add waiver of premium to the new coverage, not to your existing current coverage. Hopefully that makes sense. All right. There's other pieces and facts to it. The rate book's got it all, guys. It breaks it all down beautifully. All right. Free terminal illness benefit rider. That's on page 6. What that means is that if a client gets diagnosed with a terminal illness, and let me come off share. This is a terminal illness that's diagnosed by a doctor. Not on no Fred Sanford, Elizabeth, I'm coming to join you, honey, type stuff. Let me apply for this terminal illness benefit rider. No, it needs to be diagnosed by a physician. If that happens, then a client is entitled to up to 70% of their face amount of coverage while they're alive if they have the waiver of premium benefit. Again, that's another plug for the waiver of premium benefit. They can get up to 70% of their coverage amount while they're still living. But if they don't have the waiver of premium benefit, they can only get up to 40%. They only get up to 40%, all right? So that's different. Number 11, automatic increasing benefit rider. You'll hear it referred to as IBR. It's 10%. And I just talked about this, the IBR, the increasing benefit rider. You read about it on page 52. That means that on the anniversary date of a policy, a client will be able to increase their coverage amount by 10% on the anniversary date of their policy. And it's kind of an automatic thing. The company sends them a letter leading up to the anniversary date of their policy, letting them know that the IBR is about to kick in, increase their coverage by 10%, and it's going to show them that their monthly premium is going to increase. If a client does not respond to that letter and say, no, I do not want the coverage, Primerica will automatically do it. If the client does not want the IBR, they have to correspond back with Primerica to let them know that they don't want the increase. Hopefully y'all understand that. Now, when you're delivering the policy, make sure that your client understands that. When you're writing the policy, make sure your client understands that. We could all do a better job at that. Now, check this out. We actually have access to an IBR report on Primerica Online. And this is what you want to do, family. You want to check your your IBR report every month. Because you check your IBR report, you want to get in front of that and call the client and say, hey, your IBR, your increasing benefit rider is about to kick in. So if you haven't already, you're going to receive a letter showing you that, hey, your premium's going to go up. It's not because they're increasing it just because they want to increase it. Your coverage is also going up as well because this is how the IBR works. Get in front of that and let the client know what that is. They'll be like, oh, I remember you saying something about that. Okay, good. I'm glad you gave me a heads up. Otherwise, client mess around, get a daggone letter in the mail saying that their premium about to go up. They was like, man, I thought Benicia said that this coverage ain't going to increase. Man, what's going on here? And then they might cancel the policy because they're like, man, this premium going up every year, man. I ain't got no time for no expenses to be going up. And they don't even understand why it's going up. So that's why you can see sometimes that you will have clients that will cancel their policy in the 12th month. The reason being is because they got that IBR letter. They didn't fully understand it because y'all know people don't be reading good. They just be, man, this is a generation of skimmers. Man, we be scamming through stuff. We get stuff, we be like, yeah, man. Hold on, what's that? We ain't fully read. Because I've had people call me about the IBR before I called them, and they say, Nick, I got this letter in the mail, man. They say my coverage about to go up $5 a month, man. What's up with that? Oh, bro, you got the IBR letter. This, that, and the other. You got the letter. Yeah, I'm looking at it right now. Do you see where it says, oh, I see it now, man. Okay, cool. That's okay. And you explain to them like, well, yeah, that's okay, man. Yeah, I can go ahead and add that coverage. That's fine. But don't do nothing. It's all good. It's going to automatically do it. Or if you don't want it, just respond back and just let them know you don't want it. Okay, great. Make sure you look to get in front of that IBR so your client knows what's happening. Otherwise, they'll get confused. They think the coverage is going up and they'll cancel the policy because they say it just kept going up every year. I didn't understand why the cost kept going up. Well, they didn't know that the coverage was also going up as well. They had more coverage. All right. And so got the IBR. You can read about that in the rate book. AIR, automatic increase request. They call it AIR. That's on page 25 of the rate book. There's also a video that you can watch. It's not in the rate book, but there's a video you can watch on POL. To be honest with you guys, I'll probably mess it up if I try to explain it. Read the rate book to get a full understanding of AIR. What it is basically kind of like if your client qualifies for a better rate than what they apply for, instead of refunding them back the money, the overage of the premium that they paid, the company will just basically increase their coverage to meet the premium that they originally paid. So it's a way for them to actually get more coverage at the cost that they committed to. Something to that effect. I know it's more to it than that. Check the rate book out to find out how the AIR program works, automatic increase requests, how that piece works. Coming through. Flexible use of riders to increase coverage, right? Flexible use of riders to increase coverage. So these are unique situations to where you can customize a term for somebody to where you can have multiple term links in one policy. Maybe if you sit down with a client, they say, well, Nick, I got 10 more years to pay off my mortgage. My kids will probably be out of college in another 20 years. And I'm planning to retire in 30 years. I want to make sure that I'm covered for all of those situations. Well, you might put a certain amount of coverage on them on the 30-year term. You might put a certain amount of coverage on them to cover the value of their home if they were to pass away within the next 10 years to pay their home off. And you might put the kids' education piece on a 20-year term. Does this make sense? You don't have to throw it all on a 35 or a 30-year term, the whole thing. You can customize a person's term to meet what their situation is. We don't do a lot of that, but you can. You can do a lot of that. So there are some people out there that believe in just kind of customizing a term. You can do that. You can customize a term product. And if you're in a competitive situation, it might actually work in your favor. If you talk to a client about custom term, if the price is just for the other company is wearing you out and they can't look past the price for the value, you bring a custom term situation to the table and let them know that, hey, after 10 years, this piece is going to drop off because your house is going to be paid off. So your premium is actually going to get lower. And then once your kids is out of school, that piece will fall off because now you won't need that coverage. So your premium is going to go. A client like this is like, okay, I see what you're saying. So a client might be interested in a custom term in that regard. All right. And so just know that we do have the ability to customize the term. Number 14, one policy per family. One policy per family. I'm going to repeat that one more time. One life insurance policy per family. This is not one of those companies where we writing 2-3 policies on people in one household. We got a policy on the wife. We got a policy on the husband. We got a policy on each of the kids. Other companies do that crap. We do one policy per family. We have a primary insured, we can have a spouse rider, and then we can have child riders. Child riders on one policy. Everybody's covered on one policy. They pay one annual policy fee, whole family is covered. And then there's a benefit to having one policy per family, which leads us to the next one. There's something that's called family banding. Family banding to lower the cost of insurance for the clients. Family banding. Well, Nick, what does that mean? That means that we have rate bands with our coverages. And what rate bands are is that once you reach a certain level of coverage, the client's cost per thousand actually decreases, right? So if you ever do a quote for a client, if you do a quote for a client and you're quoting them for $125,000 in coverage, the system might tell you, go up to 150, because at 150,000, you hit the rate band where the cost per thousand actually decreases. So you might be in a situation to where $150,000 in life insurance coverage is actually less expensive per month than 125,000, or maybe even 100,000, because you hit that rate band, right? So here's the key to that. The rate bands in our policies are at 150,000, 250,000, 500,000, and $1 million, right? That's where you get that price break at those coverage rates, at those coverage amounts: 150, 250, 500, $1 million. Those are the break points. What Primerica does when they say family banding, they're not just talking about one person's coverage being at that point. They will take the primary insured and the spouse's coverage, combine them together, and see what rate band you fall in. And they're going to give you the discount based on the combined coverage amount of the family. That's awesome. That's awesome. So one policy per family, and because there's one policy per family, they can do family banding and get the discount based on everybody's coverage amounts. That's big. Outside of family banding, 16, one child rider covers all eligible children. One child rider covers all eligible children. Sometimes you run across somebody that they got some children. Not children, they got some children. Got a bunch of kids. And you talking about adding a child rider on that, man, like, hey, slow up, little daddy, man. Hey, wait a minute, man. I got some kids, man. I don't know if I can pay for all of these kids' life insurance. Whoa, whoa, whoa. I didn't say you had to pay for all of these kids' individual life insurance. If you put $15,000 in coverage, that'll increase your monthly premium by $9 a month. That extra $9 a month will cover all of your kids for $15,000 a piece until they turn age 25. It doesn't matter if you have one kid or if you have 10 kids. All kids are covered for that one child rider premium. All of them are covered. That is powerful. That's powerful. And I'm telling you right now, family, I don't know too many companies that do that. I don't know of any other company that does that. One child rider premium covers all the children, right? And so that's huge. And so kids are eligible to be child riders on our policies until they turn age 25. At age 25, they can get their own policies. And they don't have to go through any underwriting to get that, right? Number 17, achieved contestability period is honored. Number 17, achieved contestability period is honored. Well, that sounds real technical, Nick. What the heck does that mean? All right, so for those who don't know, when you buy life insurance, for the first 2 years of a policy, there's something called a contestability period, which means that if a person dies within the first 2 years of getting a life insurance policy, the life insurance company that they bought the coverage with can investigate this cause of death. They can investigate it. They can look into it and say, hey, man, this person died of a heart attack. Well, they said on the application that they didn't have no heart condition. We need to look into this and see whether or not this person has been diagnosed with a heart condition that they lied about. They call it misrepresenting, right? But it's just a fancy word for saying that they lied on this life insurance application, knowing that they had a heart condition, but they didn't disclose it. So they died. We don't just have to pay out this money. We can contest this. And so they'll get the client's medical records and all the type of stuff. They'll do an investigation. And if the life insurance company discovers that that person had a diagnosed heart condition that they did not disclose on the life insurance application, they do not have to pay. The life insurance company doesn't have to pay. So sometimes you might hear stories or situations to where people say, hey, you know, my uncle, he had a life insurance policy with this company, and within the first year he passed away. Man, that company didn't pay my aunt. Well, there's more probably to that story, right? And so we just don't know, but it may be a situation to where when Unc got the life insurance policy, he might didn't disclose everything, all of his pre-existing conditions. And then when he passed away, insurance company looked into it because they were in the 2-year contestability period, discovered some things that weren't disclosed, and decided not to pay out. Well, Primerica has a 2-year contestability period also, right? That doesn't mean that they're not going to pay out if a person passed away in the first year. They're just going to look into it. They're going to look into it. And so it may take the death claim longer to pay out when they're looking into it. But if a person already has a life insurance policy before they become a Primerica client, meaning that, let's say they already had a policy with another company and they were a client with them for 5 years. Let's say that they had $300,000 in coverage with the other company. Well, if they come over to Primerica and we give them the same $300,000 in coverage, we will honor their old company's contestability period. They wouldn't have to start over with our policy. That's why it is so important when you do a policy with somebody that already has coverage that you list their policy information on the application, that you list it, because Primerica is going to honor the contestability period of all of those policies that they had with those old companies up to that coverage amount that they had with them, right? And so that's why that piece is important. Now, Nick, what if it's a situation where a person had $100,000 with another company and they had it for 5 years, but then they come to Primerica and they want to get $300,000 with us? Does Primerica honor the full $300,000 contestability period? No. Primerica will say $100,000 is not contestable. The other $200,000, they got to pass the 2 years because that part is new, added coverage, right? Hopefully that makes sense. And so, but honoring contestability periods is a big deal. Now, there are times where I don't put the contestability information on there. It might be a situation where the person say, well, I got this policy 3 months ago. Whatever. Let's go ahead and just, yeah, that's like, but if somebody has, they've had their policy for a year, they've had their policy for 2 years, 3 years, yeah, I want give me the policy information because I want to list it on the application so we can honor your contestability period and the coverage that you had under that old policy in your new Primerica policy. All right. Coming down the home stretch, family. 18, policy e-delivery. Game changer. You don't have to hand deliver these policies. Lord have mercy. If their policy goes through underwriting and it's issued as requested, that policy will be emailed to that client. Client management portal, the client can go to myprimerica.com and they can pull up an electronic copy of their life insurance policy. They can change their draft date, update their bank account information. They can do all that stuff through the My Primerica client portal. Huge, huge deal. Instead of you having to just, man, client chasing you down and give you some new banking information, man, a client can do all of that themselves, right? This is huge right here. This is top 20 feature. No active war or active terror clause is in our life insurance policy. No active war or active terror clause is in our life insurance policy. It used to be, but when 9/11 happened, when those 2 towers went down in New York and all those people passed away, Primerica had clients on both planes and people in the tower. I want to repeat that. Primerica had clients on both planes, people in the tower, and people on the ground. A lot of life insurance companies did not pay the death benefit. Why? Because they had an active war or an active terror clause in their policy. And they deemed what happened at 9/11 an act of war or an act of terror. And so they literally looked these families in the face and said, we ain't gonna pay y'all. You just experienced one of the most tragic events in American history, and we not gonna pay you the death benefit because of an act of war. Primerica took that clause out, and we paid all death claims for everybody, every client that we had that passed away as a result of 9/11. Man, that's awesome. That's awesome. And we've never put the clause back in. So there's no act of war or act of terror clause in our policies. That's a big daggum deal, y'all. That's big. All right. So that's 20. I think I might have some honorable mentions in there. I'm not sure. Just some things like that. Extras to know. What is conditional coverage and how is it achieved? This is your homework. I want you to look this up in your rate book. What does conditional coverage mean and how is it achieved, right? And so conditional coverage means that a person is covered while their policy is in underwriting. So we do the application on the client. We submit the application. The application goes to underwriting and all that type of stuff. We tell people, hey, man, you pay that 1 month's premium. That's your good faith deposit. That protects you while your policy is being underwritten and all that good stuff. That's a big deal because people can pass away. We've actually had clients that passed away while their policy is in underwriting before it's actually issued. And so the question becomes, am I covered? Well, there's a conditional coverage. So you need to know the details of being conditionally covered. Look that up in the rate book, right? Look that up in the rate book. I think it's on page 10. What is conditional coverage and how is it achieved? Next thing is, how does insurable interest play into writing life insurance? This thing called insurable interest, how does that play into writing life insurance? I want you to look that up. That's on page, I think, 14 and 15. Because some people might come to you and say, hey, man, I want to get a policy on my brother. I want to get a policy on my parents. I want to get a policy on my kids. Well, there's a such thing as insurable interest. Insurable interest that will determine whether or not a person can actually get a policy on somebody. And so look that up and read that, okay? And then, can I write a policy on someone that's active duty military? Say I got a family member or a close friend or somebody that I know that's in the military, they're active duty. Can I write a policy on a person that is active duty military? I want you to look that up. Pages 12 and 13 talks about that in the rate book because there's certain stipulations and guidelines that you have to follow when you are writing a life insurance policy on a person that is active duty military. All right. And so let me go back. So these are the top features, 17 through 20, right? Achieve contestability period honored, policy e-delivery. They got the client management portal, go to myprimerica.com. And number 20, no act of war or act of terror clause in our policies. And guys, everything that I shared with you, man, this is something to hang your hat on. This is something to be proud of. This is something that you can stick your chest out on to say, look, man, I am a part of a company that believes in doing the right thing 100% of the time, that has a heart for people, that has a heart to really, just not only do life insurance and make it affordable and also add a lot of bells and whistles to these products that, man, people really have value with what they own, all right? So coming up next week, we're going to talk about Primerica versus everybody, right? How does Primerica's philosophy of buy term invested difference? How does it compare to all of these other cash value products? Yeah, I know your cousin sell whole life. Yeah, I know your church member, the deacon, I know he sell universal life. I know you got somebody that's been trying to hit you over the head, maybe your frat brother, sorority sister, whatever the case may be, college classmate. I know they all on social media talking about index universal life insurance and all this type of stuff, like it's the best thing since sliced bread. I know they talking about how, you know, this is how wealthy people create wealth. You can be your own bank by having a cash value policy. You can be your own bank and all that type of stuff. And you can basically borrow the money from yourself. They frame that stuff all different type of ways. We're going to talk about it next week. Primerica versus everybody, right? So you need to be on for that next installment, have your teammates on, because we're going to talk about how do these particular policies work? What is it about them? And we're going to talk about how do you explain them to a client? So if you run across a situation where somebody has a policy, they have one of those policies, how do you explain it to them in a way that they can understand it? And they say, I don't want that. I want what you have. We're going to talk about that next week. All right. And so hopefully you guys have gotten something out of this. A couple of quick announcements, understanding life insurance. Guys, it's time for a revival. It's time for get it. Get it. She in that thing. Yes, say praise him. Praise him. Praise him. It's time for a revival. When we talk about a different revival, man, it's time for a revival. Hey, in the Life Licensing Blitz meeting. Come on, somebody. We need you. We need you. Hold on, let me go back to it, man. It's time for a revival. Get it. There it is. She about to speak in tongues here in a minute, y'all. Oh, man, she in that thing. Look at that brother over there to the side. Look at the cat right here, man. His neck just moving, neck popping. There it is. We need that type of energy around this right here. Life Licensing Blitz meeting. We need revival. We need you. All unlicensed teammates. All unlicensed teammates. We need to get you on this Thursday's Life Licensing Blitz meeting. This is your support group. We've had people come through, be successful. We need to build up the attendance to the Life Licensing Blitz meeting. It's time for the next wave of teammates to go through the licensing process. Over the last 90 days, we had over 20 people pass their life insurance exam. And I'm telling you, this quarter, for the next 3 months, we need to have 20 or more teammates pass their life insurance exam. We need to have that. But in order for that to happen, we got to get people recommitted. And this isn't just new teammates. This is you as well as the leadership. You recruited the people. You're already licensed. Get your people to the Life Licensing Blitz meeting. This coming Thursday's meeting, it needs to be the best attended meeting in a minute. This is a support group designed to help your teammates pass their life insurance exam. It's at 8 p.m. Central Time, 9 p.m. Eastern Standard Time, 6 p.m. West Coast Time, right? This is the Zoom meeting ID and the Zoom password. Teammates, can I get your commitment? Let's plug in to this meeting, man. Rahima's doing a fantastic job. She quarterbacks that meeting. Depends on what my schedule might look like. I might be able to jump in there this coming Thursday. But, man, it's time to really, really get revved up. We need a revival in that area, all right? And so I know I got a minute left. Let me run through this. Man, record run October. Man, you do anything this month. Man, this is for people who, man, you can just follow the mirror, right? Recruit somebody, do a life insurance policy, get life license or securities license, write a new investment account. Internet, Primerica gonna send you a Primerica pandemic mask, right? So you're gonna get this mask with the Primerica logo on it. Pretty nifty, right? Companies added 390 new slots to the Epic Adventure Contest, all expense paid trip to Orlando, Florida. We shutting down Universal Studios, all that good stuff, man. It's just crazy, right? All these new slots for the Epic Adventure, right? Contest ends next month, y'all. So this month and next month, that's it. It's the last 2-month sprint of the contest. And so if you qualify at your level, these are the different levels. You do this level of production, you're going to get extra points towards the contest. You can log on to Primerica online and find out all the details behind that. And also, if you level up, you're going to get 4 extra passes to the Epic Adventure, but you need to do it by, oh my goodness, by October the 15th. Lord, that's Thursday. You got to be at these numbers by Thursday if you want to if you're gonna do this. All right. So hey man, play up to your next level. Yeah, man, that's interesting. Okay, so yeah. So we got 2 days to do this. Oh, that's from last week. Never mind that. Okay, boom, boom, got it. All right, here we go. Let's stop sharing. Yep. And so guys, let's get it. We excited. It's time. Let's make something special happen. We're at the 13th of the month, almost the halfway mark of the month. It's time to turn it up. The activity is picking up, so I'm excited about that, but it's time to turn it up some more. So with that being said, guys, that's all.